Awesome. Well, thanks so much for having me. My name is Megan Brantley. I'm the Vice President of Research at Lakefolio. And the whole purpose of this presentation is just going to give, I guess, a little bit of a different flair about how we use social data to spot opportunities in trading. This is, I would say, less technical in terms of how to place trades and things of that nature, and more just a supplemental research tool that you can use to say, okay, while you're making your investments or trading decisions, is the consumer in line with my hypothesis? How does data stack up? And so just some info about Lakefolio first. What we're doing is we're analyzing social media, and we're also now using some web data, some app data to understand consumer spending behavior. And we're doing this in real time. And so what that allows us to do is really see ahead of when a company reports earnings, how we expect them to perform. Do we think demand is going to increase? Do we think demand is going to decrease? Do we think that money spend is going to come in, above or below estimates, things of that nature? And one of the major ways that we're able to do this is because we do have an exclusive partnership with Twitter, which gives us access to all tweets, all public tweets, that is, all the way back to 2012. So whenever we build out and whenever we add these companies to coverage, most of these, we're covering consumer-facing companies. We're going to be really good at tracking a company like Apple because people love to talk about purchasing a new iPhone or purchasing a new Apple Watch. They're probably less likely to talk about energy spend or things of that nature. So, we're really operating in this consumer-facing world, and we're able to back test this for now a decade. So it allows us to really refine our data and refine our algorithm, because for every company that we cover, our algorithm is a little bit different. If you want to dig into this, you can actually go to Twitter and their development side, and they did a case study on how we were able to use data to predict some major moves in stocks like Roku and also Chewy. One way that we're able to do this is because we have built and developed this massive brand map, because we realize that the consumer, whenever they're talking about online, the things that they're buying or the products that they love or the services that they like, they're not always explicit in saying, I just did business with Apple today. I just did business with Nike. Maybe they talk about closing their rings on their Apple Watch. And we know that whenever they're talking about that should be an engagement mention posted toward Apple or attributed to Apple. In other examples, a lot of times consumers don't realize what brands and products are actually owned by publicly traded companies. So, maybe they just bought a pair of Hey Dude shoes, and they don't realize that that company now is actually owned by Crocs. Or maybe they bought a pair of Converses and they don't realize that company is actually owned by Nike. So we have built out this extensive kind of linking brand map that allows us to make sure that we attribute things appropriately. Just for an example, and I think this is probably like a year old, but just to show you some of the brands underneath the Apple umbrella and some of the Apple Watch keywords that we're looking at. Overall, we're analyzing between 3 and 5 million tweets a day. That varies based on consumer usage, obviously. We cover about over 440 companies. And this number, I think a year ago, was around like 330. So we're adding these fairly quickly. And I think that one thing that's interesting down here, you'll see that we cover snapshots as well. And what that means is, we're actually tracking when these companies or brands change hands. So when Amazon bought Whole Foods, when Crocs acquired Hey Dude, things of that nature, because we know that you can't attribute potential revenue prior to the point of when that brand was actually owned by a publicly traded company. And so within our universe, you can see that's 21,000 times that a brand or a product has changed hands, or maybe even a company has launched a brand or a product. So I think that's pretty significant, and that's what helps us to be more predictive with our data. And then more recently, we've really started studying these consumer macro trends, like For example, using a digital wallet, which we'll get into later, maybe booking travel, making, making a reservation via Airbnb, all of these different types of trends that people could be doing, because we find that when trends and our data align, that's a really powerful indicator. And we're looking for three major things. So first of all, we're looking for that brand mention, like I mentioned before, but then we're also looking for sentiment indicators. So positive and negative sentiment. How was a consumer's experience with this brand, product, or service? We're also looking for purchase intent. And purchase intent is really important because for us, that is what is indicative of money spend. This is the way that a consumer would talk about engaging with a product or a service that indicates that either they bought a product or they used a service. And our data has been studied. Just for example, this is from Georgetown University. They conducted research on our results and on purchase intent. And what they found is that our purchase intent specifically, once aggregated, it's predictive of upcoming sales and the unexpected component of sales growth. So we feel like this is an edge that we can give to traders and investors, mostly because we're listening to consumers in real time to understand how they're engaging with these brands and products that are publicly traded. And so I'm going to go through 5 names that are on our radar right now. Some of these right now, I think the first couple that I'll be going through have kind of been thrown out with the bathwater along with a lot of other tech, quote unquote, tech and growth stocks. But according to our data, we feel like maybe they're starting to get a little bit undervalued now. I think Square is a really good example of this. And I want to show you just an example. So this is our data, and we're looking at consumer happiness. And what we mean when we say consumer happiness is, you see that 75% all the way down to 43%. So of all of the consumer mentions that we're tracking, what percentage of those mentions are positive mentions? What percentage of those mentions actually indicate the consumer had a good experience with the company? For us, consumer happiness is a really important long-term indicator for future growth within a company. And I think that you'll see a theme with a lot of these names at the top. You look at Square, you look at PayPal, you look at names like SoFi, and what you can see are that these kind of digital wallet companies, these different forms of, from a traditional financial institution, consumers are so much happier with the overall user experience when they're engaging. And you can see there's almost like a clear line in the sand when you look at these digital wallets versus traditional legacy banks and payment providers. So, and Square is at the very, very top of that list. These are some of the trends that we're following. I mentioned those digital wallet mentions, and you can see this number is continuing to soar. I think these mentions, people talking about using a digital wallet in general, have risen by more than 117% year over year. And as you can see, we don't see any signs of that slowing down. We don't see any signs that this adoption has shifted or that all of a sudden people aren't using digital wallets anymore. In addition, you can see these buy now, pay later mentions. This is important for Square because they did acquire Afterpay in 2021. I think that acquisition was officially closed in January of this year. But for us, when we look at mentions of people who are talking about using a buy now, pay later service, those are still up about 44% year over year. And so, these are just 2 examples of 2 trends that are propelling Square. And I could have included a handful of other trends. I could have included people who are using digital wallets to trade cryptocurrencies. I could have used people who are using their digital wallets to send peer-to-peer payments. Square is the owner of Cash App, and that's just one example. Cash App and Venmo specifically. I think we'll look at that a little bit later in this, but this is just one pot that Square has on the stove. And what you can see in these mentions, so these bars are purchase intent mentions for Square. So these are mentions of consumers who are actually doing business or indicating that they are doing business with one of Square's products or services. So whether they're using one of Cash App services now to complete their taxes, whether they just signed up for Cash App, whether they're using a Square card reader at a small business. And I think what's interesting is this has been a pretty leading indicator. If you look all the way through the third quarter of 2020, you can see that demand rising well ahead of the stock price. And then you start to see some tempering a couple of months before, we started to see a slowdown in growth, if you will. And I think that that has been part of the driver for Square's recent pullback. And what's interesting now is we see that in 21 Q4, so in the last quarter, they started to make improvements. And now in 22 Q1, they're doing even better. So what this tells us is this quarter, the reason that it's shaded is because it hasn't completed yet. The first quarter, I believe, ends on March 31st. So we're really close. We only have about 21 more days until they, cap off that quarter. But what we can see in real time is that we're expecting this next quarter to be much better than last quarter. And I don't necessarily think that the street is expecting that. I think the street is expecting a lot of the stimulus payments and things like that to really inhibit growth, since those aren't going out to consumers anymore. And that was previously a large driver of growth. But according to our data, this is, Square is definitely still growing, and the street may be in for a surprise. Let's see. And then one of the brands within Square that really surprised us that's performing very well is Tidal. And I'll kind of go through this later, but I'm sure you guys remember whenever Spotify was in the middle of the major, drama with Joe Rogan, with Neil Young, with people who are saying they're going to boycott. Much of that is behind us now, but there were a handful of users that actually did leave Spotify and go to other platforms. And according to our data, Tidal was a huge beneficiary of those users who did leave. You can see, this data is from about 2 weeks out of the major drama surrounding Spotify and Tidal, but that is included in this current quarter that Square will report on. And you can see that the purchase intent, so that adoption rate for Square's Tidal's music streaming service, who owned by Jay-Z, side note, was pretty explosive. And when we look at that consumer happiness rating, especially over a peer like an Apple Music, I think that that's really powerful. In fact, whenever we dug into the tweets and dug into the mentions, a lot of users were praising Tidal's ease of transition. Tidal allowed them to transfer playlists really easily. They liked the user interface once they were there. It seemed very just easy to understand. And so this is kind of a bonus brand, underneath the Square universe that many people may not be keyed into, but that, we can see kind of this influx of users in real time. Another brand underneath Square's ecosystem is Cash App. And you can see Cash App's demand has actually risen, or that momentum has risen dramatically in the last year. You can also see Venmo, who's owned by PayPal, would say that Cash App and Venmo are the largest peer-to-peer payment systems. And what's really cool about this chart is it's, on your x-axis, you can see that demand growth. And then on the y-axis, you can see that consumer happiness level. So the ideal positioning anytime we look at a chart like this is to be in that upper right in terms of that quadrant. And that's exactly where Cash App is. So we think that Cash App is doing a good job of continuing to build its audience base and engage its audience base. And it's helpful to see it versus a peer like Venmo, who's still doing very well, but not as well as Cash App. And then these are just some, reports and business updates to go along with Square. We always like to do our due diligence to see how the company is performing. But I think the key takeaway from all of this for me is that, Square has a very ecosystem driven mindset. And they realize that when users are using more than one service, they're likely to spend and engage more with Square, or with Block, I should say, as a whole. And you can see that example just from its Square ecosystem that, people who were using 4 or more of their products generated more than 10x the gross profit. So I think that this is just an example of them being able to leverage their ecosystem. And I see a question coming in asking where we collect our raw data from. Twitter is where we get the majority of our social data. We also, we also get data from digital services online. We're looking at Google Trends. We're looking at app downloads. We're looking at app usage and things of that nature. And all of that kind of goes into our overall score whenever we're analyzing these companies. And the reason that we like Twitter, just for some background, I know I'm kind of interrupting the flow a little bit, but Twitter is character limited. And so that means that consumers have to get to the point fairly quickly. We've also found that just in general, the way that people use Twitter and share information on Twitter turns out to be really predictive, more so than something like a Facebook. With a Facebook post, you can have somebody kind of drone on and on about different issues, bounce back and forth. It's a little bit more emotionally charged, shockingly as that sounds. Whereas Twitter, people are much more concise, and we have something, there's something called the proximity operator that, whenever we're looking at things, because of that brevity, consumers are more likely to be expressing that purchase intent or that happiness toward the subject that we have recorded. So if they're talking about loving smart water, smart water is owned by Coke, but they are, more likely to be, if they said love and smart water in the same tweet, that love is more likely to be attributed to smart water in Twitter just because of that character limitation. The next one on our list is Roku. And so this has been one, we've played Roku to the upside many times, and this is starting to get in our level of, ooh, we're really liking it here. We think that maybe the street is majorly underestimating them. This is an example of that outlier grid. And what you can see is that Roku is over here to the right. So from a streaming mentions perspective, obviously streaming just as a whole isn't exactly hot right now from an investor perspective, right? Streaming was really hot during COVID, and that's what everybody was doing when they're at home. And now a lot of people are going outside, they're doing other things, they're traveling, they're spending their entertainment time elsewhere versus in front of a TV. However, Roku is still by far the leader in this, and we don't think that the concept of people streaming versus using traditional cable is going anywhere. Whenever we look at these mentions, these are mentions of Roku, and you can see just how leading this was from a chart perspective. We could see this massive increase in Roku in early 2020, as soon as the pandemic really happened, and that was months ahead of that major run up in the stock. And what we're seeing now is we're starting to see that trickle back up again. We're starting to see Roku kind of readopt its normal rate of growth. Meanwhile, the stock is trading below levels that it was in 2019. And so we think that might be a little maybe undervalued at this level. Another thing that Roku has going for it is it's building up its actual content library, which is interesting because this gives it another source of revenue. So the major source of revenue for Roku are not necessarily in its player sales. So, it's less important for it to be talking about, purchasing a Roku. It's more significant for them how many people are signing up for some type of streaming subscription on that Roku, because Roku gets a cut. And then also, viewing advertisements over top of the Roku, because Roku gets a cut of that. So the Roku channel is, it's a free streaming service that consumers can watch on any type of streaming platform that they use, but it's ad supported. And what you can see here is just continued growth, even in the first quarter. And this is just, this is a pretty high sample size of people who are talking about this. And 60% growth is no joke whenever you're looking at this. And to continue to see growth on top of what we saw even in 2020, I think is really impressive. Let's see. And then we also look at happiness. So you can see here that, one of the major dings in Roku's consumer happiness over the last year that kind of caused a lot of drama is often whenever there are carriage disputes. So, consumers don't really care. They don't care about the nitty gritty about why a channel isn't on there, why a channel isn't on Roku. I think the most recent one is Roku was not carrying YouTube TV for a while. And if that was your main way to ingest content, then you probably weren't happy. And it didn't matter whose fault it was, whether it was Google or Roku, you just wanted to be able to watch it. And so we've started to see Roku kind of work its way through a lot of these carriage disputes, and sentiment really normalize in the past couple of months. And then just in terms of, let's look at these overall trends. And I think what's really interesting is that we're starting to pick up on, and I'm sure a lot of you have experienced this personally, just subscription fatigue from consumers. So people who are saying, I have so many subscriptions, I don't even know what I have anymore. At this point, there are so many different streaming subscriptions. I know personally in my own house, you've got Disney Plus, you've got Discovery Plus, you've got HBO Max, you've got Netflix, you've got Hulu, you've got all of these things. People say this is just so much to keep up with, but Roku's entire value proponent is that they organize all of these different streaming subscriptions in like a cohesive way and a cohesive viewing experience. So, this a la carte streaming bundle, the way that Roku presents this to consumers could actually be a tailwind, because that is the value that they provide, is that, we provide this cohesive way that you can view all of these different things that you have. I think another key here on this chart is you can see that there's an increase in smart TV usage, and Roku is actually the number one in terms of market share provider of the smart TV software integrated within those TVs in the US. And so a lot of people, if you're using your smart TV, you may be using Roku software and not even realize it. And so I think that that's really interesting. You can see this is on a quarter-over-quarter basis, that for us, whenever we look at this, while streaming, you can think about streaming hours being down, sure, but that doesn't mean people are returning to traditional cable. When you look at those mentions of cutting the cord, those are actually up by 12% quarter-over-quarter. So if you cut the cord, if you want to start streaming, you have to use some type of a device or some type of a streaming device. And for us, at least, Roku appears to be that leader at the moment. These are the mentions of people talking about streaming. And obviously there was a significant COVID bump, but we're starting to see that trend, normalize. And then not just that, but continue to grow. So we don't think streaming is going anywhere. As you can see, these are just some examples of consumer tweets that we're looking at to see that, people love Roku's interface and they like it better than competitors. And honestly, the devices are not that expensive. Again, that's not necessarily Roku's bread and butter, but they have a really good platform once you have that, kind of streaming integration. And then shares are trading significantly lower than they were even, less than a year ago. This may be overblown. I know that previously they really got hit because there was disruptions in the production of smart TVs, which, as we talked about, Roku is the #1 smart TV OS. So as these supply chain disruptions kind of work themselves out, and we're seeing signs that they are, we think that this could benefit Roku. So, next quarter, the market may be in for a surprise. This third one, this is a really fun one. This is Adobe. And Adobe is really cool because this was one of the first companies that kind of moved to this subscription model over a decade ago now at this point, but it turned out to be a really smart way for them to build this recurring revenue stream. And what you can see here, this is the Adobe outlier grid. And so we looked at brand mentions of Adobe versus other just tech peers, because it's really hard to find a competitor or any person that does what Adobe does across the board. And you can see that Adobe members are typically pretty happy, that the brand happiness level is much higher versus peers, and that demand is really starting to ramp. So whenever we look at user growth, I meant to put an arrow on here, but you can see a massive bump in 2020 whenever people all of a sudden had to start working from home. And they needed to be able to have access to all of the programs that they had in their office on their home computers. So we saw a lot of overlap there, but just in general, the need for digital management of assets. So, all of these documents that you're managing, they needed to be able to send them digitally back and forth. They needed to be able to sign things digitally back and forth because people aren't in the office. And that's just not the way the world works anymore. And so Adobe really stepped in through a lot of the different programs that they have. We saw a lot of mentions of fill and sign. They have a lot of digital faxes and scanners and things like that. Adobe Acrobat has a lot of digital editing tools to allow people to edit these documents and then send everything off digitally. And we're starting to see that ramp back up again this year. So after, I look at this purchase intent and I see this as a really good indicator of momentum. And so Adobe was starting to lose a little bit of its momentum after this massive surge at the beginning of the pandemic. And now we're starting to see that tide change again. So anytime we start to see things turn around like this, it really catches our eye. And then these are brand mentions for Adobe. And so a lot of times, it's really difficult sometimes to capture, those purchase intent mentions for Adobe for us. Those are going to be mentions of, signed up for an Adobe product, downloaded an Adobe product. That first indicator of a money spend, that's not necessarily going to be using an Adobe product. And that's really where these brand mentions come in. And these are mentions of just people talking about their experience with the different Adobe products. And you can see that really starting to ramp at the beginning of this year. And a lot of that is due to some trends that we'll hit later. But I also want to show something else that's driving this. And one thing that Adobe realized is that there is a learning curve to using their products, especially if you're using products on the creative side of things, which is a large driver of their revenue. So Photoshop, InDesign, Illustrator, all of those things, they're so technical, they allow you to do so much, but there's a learning curve. And so you have companies like Canva coming in and making it really easy for users to make some, pretty just elementary edits and things of that nature. And so Adobe realized, oh no, we cannot be left behind. We cannot be, lost in the shuffle. And so they created this Adobe Creative Cloud Express. And you can see that for people who are searching that Adobe Creative Cloud, these are those related queries and how fast they're rising. So plus 700%, plus 650% for all of these different search queries that they could have been using. And for us, we can see, and I'm seeing a typo on this, it's more significantly consumer mentions of using the Creative Cloud, their kind of light offering for us have increased by about 76% month over month. So we're seeing nice growth out of this. And this is a really smart defensive move. And one thing Adobe has talked about is they see that when people come in through Creative Cloud Express, they can kind of coach them up and get them into these other higher level top tier product offerings, and vice versa. The people who are also already in these higher level top tier offerings, they really like having access to Creative Cloud Express for when they need to do something on the lighter side. So it really helps to boost happiness among existing users. And then it opens the door for a whole different swath of potential users that are more on the amateur side of things that could eventually grow and evolve higher down their product pipeline. And, some of these, this just shows the subscription stickiness that Adobe has with its product, that, and anytime you see words like stranglehold, Adobe has a stranglehold on me. I think it just shows the value prop that it brings to consumers, that they really can't find this level of user experience and just skill set that they need to do their jobs anywhere else. But for the most case, people are very happy with the overall Adobe experience. It's really high happiness rating. And so these are some of those trends that I was talking about. And this is something that we're following really closely because you can see, obviously, people are, one of the big focuses for Adobe is now not just, okay, what can you do on your computer, but what can you do on your phone? And that's really smart. If you think about all of the things I'm sure that you guys do on your phone, I know whenever I'm out, I'm checking emails on my phone, I'm reviewing documents on my phone. I love if there's a way that, while I'm on the go, if I can do something on my phone, I'm going to do it. And this is an area where Adobe says, okay, yes, we see this. And, we want to figure out how to make life easier for people to do any type of work that they need, digital work that they need on their phones. And so you can see people are talking about, managing documents up almost 30% year over year. People are talking about actually doing graphic design and things of that nature on their phone, up 15% year over year. But this hybrid workplace, I think, is really interesting because now you have people who many are returning to the office, but some aren't. And so you have the need to be able to, share documents back and forth, work within a team to edit those documents. And there are services and products that Adobe provides to support this type of a hybrid workplace. So these are some business updates. I think it's really interesting to see all of the different arenas, but I know that one thing you'll see in here is this mention of the metaverse. And this was interesting. As I was reading through their last earnings call, one of the analysts joked with the Adobe leadership and said, the only buzzword that you're not involved in seems to be electric vehicles. And Adobe kind of laughed and they said, oh, just wait. Obviously, there are no indications that they're getting into electric vehicles, but they are on the cutting edge of so many trends that are top of mind. And the key takeaway with this metaverse nod is not necessarily that Adobe is going to be this major player of the metaverse, but it's this concept that increasingly creative assets need to be digital. And, people have an increasing desire to create these, whether it's an avatar, whether it's a gaming environment, whether it's an interactive little creature that's on your phone in some interactive video format that you can do via Adobe Aero. This concept of digital assets isn't going anywhere, and people need a way to create them. People need a way to view them. And Adobe offers both sides of that platform. So in all, we think that Adobe is really well positioned moving forward, and we especially like it since the stock has pulled back. And now Nvidia, I think Nvidia is another name. I know that in previous years, whenever I've given a presentation similar to this, I'm pretty sure Nvidia was included, but it feels unfair to not include them again because we're seeing something kind of similar to what we saw in Adobe and Nvidia. And that is that this demand is starting, this momentum is starting to build again after cooling off for a bit. And anytime we start to see that momentum build like this, that to us is, we feel like we're really getting ahead of the game, that this is early, that people really may be underestimating what Nvidia can do. We look at these happiness ratings, you can see that the happiness levels are going up. One of the biggest drags on consumer happiness previously was mostly just availability of chips and graphic cards that they supply. Consumers could not get their hands on them. And while that still is the major cause of negative sentiment, you can see it's starting to improve. So I think Nvidia has been under a lot of pressure due to investor supply chains concerns, and rightfully so. However, according to our data, looks like some of that pressure is starting to wear off. We're starting to see, fewer mentions like this of not being able to access products that they want. But I think you'll see how high over the market price that some of their products are going for. This just shows us that consumers, love Nvidia and they love the products, and that Nvidia has serious pricing power, which is a great position to be in. And this is this chart, this trend, people searching for processing power. This is another indicator for us that some of those supply chain pressures are starting to, mend, because we saw them spike tremendously over the last year. And now we're starting to see some normalization. Now, are they still higher than they were in 2020? Certainly. But is it getting better? Yes. Absolutely. So I think that this is a trend that we watch really closely alongside NVIDIA, because it really helps us get a good gauge on how available these units are across the board. Because a lot of times consumers aren't necessarily going to call out a branded NVIDIA product. They may just say, I really need this CPU or GPU. And then from a trend perspective, I think another, checkbox in the NVIDIA Pros column are just the amount of macro behaviors that are driving demand or driving money spend for NVIDIA. They have, whether you're talking about crypto mining, whether you're talking about the electric and autonomous vehicles and the cards that are needed for that, whether you're talking about gaming, even though gaming grew so much in 2020, look at this, it's still growing. PC gaming mentions are still almost 4% higher on a year-over-year basis. So all of these behaviors that we're tracking are powered by NVIDIA. And so I think that this is just really powerful to be able to use trends, these generic trends, alongside of the overall, NVIDIA specific trends, because it explains, okay, these could all serve as major tailwinds for NVIDIA moving forward. And these are all things that we can still, continue to track to make sure that our thesis is staying on track. So this is just some of their business updates. You can see that I think it's crazy that their gaming card demand is still expected to exceed supply through 2022. So while that's a problem, that's a heck of a problem to have, but they do expect their supply chain issues to start resolving as soon as this current quarter. And we're seeing that in action. So this is kind of a nice check, especially as shares trade much lower than they have versus the last year, that, as the fears in the overall market start to subside, we think NVIDIA might be one of the first winners to kind of get propped back up. And then this last one, this is more of a fun one, but I think it really showcases what we're listening to. So this is Duolingo, and I don't know if you guys have used this. It's an app on your phone where you can learn new languages. And this is some mobile usage information, but this is really the chart I want to get to that I meant to include. And these are the average hours spent on a mobile device. And I think this just shows that we are more addicted to our phones than ever. And basically every market studied, the amount of time that people spend on their phones has risen dramatically. And so Duolingo is well positioned on these mobile devices. And this is really crazy. These are mentions of people who are downloading and using Duolingo. And so you can see in Q1, which ends March 31st, that pace is pretty high. That's really, really significant. That adoption rate of this app. We see happiness levels that are really high. And we see a lot of people, we look into these mentions. Anytime we see a jump like this, like that 22 Q1, like that pace, when we see that level of a change, we start to dig into tweets and we say, okay, what are people talking about Duolingo? Like, why are people so obsessed? One interesting takeaway is that Duolingo did a great job leveraging themselves on TikTok, which sounds silly, but we know that TikTok is an extremely popular and probably the fastest growing social site that we track, especially among the younger generations. And that brand, the Duolingo brand, went viral. And we're really starting to see that translate into actual app downloads. And people are talking about being addicted to it. I know that on a personal level, I went on a hiking trip not too long ago where we didn't have service. And two of the hiking trip members were, really upset because they were going to lose their Duolingo streaks. And I was like, I can't believe this is a thing, but I'll trust you guys. And this does seem to coincide with our data. And these are just some interesting trends. We listen, especially at the beginning of the new year, or people talking about New Year's resolutions. So usually you think about these when it comes to diet or exercise or, wellness habits or meditation, reading books, things of that nature. But learning a new language really popped. And whenever we looked at Google searches of people who are talking about, how to learn a new language, I think it's really interesting. A couple of takeaways down here on these related queries, that Duolingo is the only branded mention that you see in these related queries that are listed. There are no other branded mentions there. And then if you look at the ways people are talking about, people are specifically looking for an app to learn a new language. So they want a way to connect on their mobile device. And Duolingo obviously offers that. And then from a business perspective update, I think that Duolingo actually reported another earnings release since we updated this, and they had a really nice report. But I think that the key takeaway here is that their efficacy rate. And so they found that if you read this, the users who completed 5 units performed as well as students who had completed 4 semesters of university language instruction. So the fact that Duolingo has found a way to gamify their process and, retain users on their app, I think is really fascinating. One thing that we would like to see is that, you can see in the stat up here that the overwhelming majority of Duolingo users use a free version powered by ads. And so I think for us, we would like to see that number obviously trend more toward the premium paid version. And that's something that we're watching for. I would say Duolingo, of all of these, of Square, Roku, Adobe, and Nvidia, Duolingo is obviously the wild card, but the data was just so telling and interesting that it caught our attention. It almost reminds me of a few years ago, we were following a company, Build-A-Bear Workshop, and we started seeing things like we're seeing with Duolingo, but within Build-A-Bear Workshop. And I know that Build-A-Bear, that stock has performed incredibly well over the last year and a half. So this is kind of one of those things that it's thrown onto our radar. It's almost become this viral-like sensation. And so we're keeping up with it. And then I wanted to include this at the end because this is a way that if you're interested in some of the concepts that we talked about, kind of how we use like Folio to get ahead of what companies are about to report, and just whenever we see things start to move in our data, you can sign up for our daily drop. We send it out every day to your email at 3 p.m. This is completely free. And it covers a range of topics. We oftentimes use, we do earnings previews so that you can, we're previewing a specific earnings play for a company that's about to report. A lot of times it's just trends in general with a bucket of related companies. Sometimes it's just we break down a company, but it's all free and you can sign up there if you want. And then as you get going, we have a partner where we can sell kind of like individual trader, whether it's a formal opportunity alert or a trend report, these premium types of reports. But for the most case, our major clients are institutions and hedge funds and quant funds and things like that who just ingest our data via API. Another place that you can catch us is on the TD Ameritrade network. We are on the fast market segment daily around 12:30, sometimes around 12:20, and that's Eastern time. So if you ever want to listen to myself or one of the two founders engage with TD Ameritrade, and I know that they go through a specific trade, you can tune in every day between like 12:20 and 12:30. It's like a 15-minute segment, but those are a lot of fun, and connect with us. And then if you have any questions, you can reach out to me. My email is megan@likefolio.com. I think that the thing that I'll end on for this is that, the way that we look at things is that this research is, this is something that can supplement kind of your trading hypotheses and your trading theories. We don't think that this should necessarily be your only resource for sure, but I know that for me and my own, whenever I'm doing my own trading and investment, I can't even imagine not having this kind of backup check, or it almost feels like cheating sometimes. And I know that it's helpful to be able to say, okay, you know, is my thinking and is the consumer thinking in line? And then I especially love it whenever our data, you know, brings my attention to something that I may otherwise had never even considered. And then I look in and I spot something and I say, oh boy, this looks like a great opportunity. But I know I'm wrapping up a little bit early, but I'm happy to answer any questions or go back through any of the data if you guys have any. And if not, that's totally fine.
I have a question for you.
Sweet.
So do you try to track the trends on any sort of like alternative investments, you know, besides just public companies? Like, you know, there's sites to invest in wine. There's people who invest in bourbon, you know, people invest in, you know, like paintings, that sort of thing. Have you?
Yeah, that's a great question. We don't. We have looked into cryptocurrencies specifically. You know, we're building out more just support for that because Twitter is such a powerful platform that people love to talk about different cryptos. We also listen to investor sentiment. So we do have something called stock chatter alerts. So, you know, we're listening for whenever a certain cash tag is really high in volume, and then we can kind of analyze the bullish or the bearish nature of that. And that's a little bit different than I would say our pure purpose, which is understanding the consumer, but it is something that we can still do. And so for us, it's almost like, you know, you can use it to play offense, but you can also use it to play defense of, is this, now I know that this company I've been following is wrapped up into like a meme stock, and maybe I don't want to be involved in that, or maybe I do, but it's good information to have. Someone just asked an example of how to use your research to relate to your trade. So I think that one way to do that is, let's say you're wanting to make an earnings play on something like an Apple, or I don't know, whatever the company would be. You can go in and look at our dashboard and you can kind of see, okay, what is demand looking like for Apple? Are more people talking about buying an iPhone now than they were last year? And does this growth rate line up with what the street is expecting? One thing that we do provide that I didn't go into on this for individual investors is we have something called the, it's like a month or a weekly earnings sheet. And so we actually go through and we preview all of the companies that are about to report earnings for the coming week. And we give a score. And so our score can be anywhere from a -100 to a +100. It's based on all of the metrics that I just talked about. So it's based on consumer happiness, based on consumer demand, overall brand volume. We take into account trends, and we give that number. And anything plus or minus 20 for us is pretty neutral. Just to give scale, I know that Square isn't expected to report earnings soon, but I checked before whenever I was you know, checking through things, and their score was a 65. So that's, for us, that's a really bullish indicator. And then we also tend to give 3 different ways that you could play the bullish trade if you wanted to and stay risk defined. So that's just an example. And if you email me at Megan@LikeFolio, I can hook you up. We actually have a partner now who helps us to manage all of our individual, you know, trader memberships. And I just saw that try to subscribe to Daily Drop, and I can't click submit. That's good to know. I will let our development team know that that link is not working because it should be working. But hopefully that gives an example of how we kind of use our research and data to relate to trade. Also, when we put out these opportunity alerts, so let's say we're highlighting one. I know one, just as a bonus, I know one that we're working on right now is actually Airbnb. Whenever we put together these research reports, we always list an example trade or an example way that you could trade something if you wanted to. And the key for us is, we do a lot of option spreads, and we try to stay really risk defined on those.
Okay, any other questions?
And in the meantime, if you would like to sign up for the daily drop and you can't, feel free to email me, and I will, until we get this link resolved, which hopefully won't take long, I'm happy to add you to that list.